let's connect with Geoff Dennis, an Independent Emerging Markets Commentator and an old friend of us here at ET Now. Good to have you as ever, Geoff. Now that we are seeing slowing of growth in the US jobs market, do you believe this revives hopes of investors on Wall Street that the Fed will indeed cut interest rates this year, despite that hawkish commentary coming in from the Fed chair at the last FOMC meet?
Absolutely. I think it does revive the chances of rate cuts later this year. I mean, everybody's head should be spinning about the changes in the data and the changes in Fed rhetoric, if you like. But I've tried to remain consistent. I think there's going to be 2 rate cuts this year, one in July, one in December. And I think what this data today does is sort of get you on the road towards that, July cut. This was a softer than expected set of data. It was not super soft. It was just softer than expected, with the net down revisions in the payrolls to the 2 previous months. Unemployment up a little bit. Wage inflation was very important, being soft. So I think there's enough signs here that the economy is going to soften heading into Q2, with strong possibilities, in my view, that inflation will start to decline again in Q2. That I think, as I say, we're on the road to a July rate cut from what I can gather from this data today.
3, but 2 is what you're sticking with, Geoff. We're also seeing a fall in US bond yields, now going up to 4.5%. But do you see the resilience of the American economy keeping investors' funds still rooted in the US, or do you believe the flow of funds into emerging markets like India is likely to grow now?
I think the flow of funds to emerging markets generally will increase. I mean, I think it's going to remain very volatile. And as I've said many times to you, Vikram, and on this network generally, is that the key driver here of emerging markets is going to be a weaker dollar. We've seen the dollar soften today, which is what you would expect after this set of data. Clearly, the markets are not quite as euphoric as they were immediately after the payroll numbers, but lower yields, a lower dollar, lower oil prices will also be tremendously important for a country like India, but also will, I think, be very important for some slightly softer economic data, inflation data in the US in Q2. Gasoline prices in the US are down 10% pretty much from their high just a few weeks ago. So if we get the lower dollar that goes with that, as investors start to put some rate cuts back on their agenda, back on their forecasts, I think that will pull the dollar lower, and that will push money towards emerging markets, which are not having a bad year anyway, frankly, but I think they'll do better from here.
About the elephant taking a walk, the elephant of inflation taking a walk, but the fear is that it could return. That's what we got the RBI governor say over here in India. You're talking about inflationary concerns in the US. We heard what the Fed chair had to say as well. So when you look at the overall inflationary picture, whether it's in the US or in India, what does it suggest to you? Are we seeing a trending down, or is that going to be some time to come, considering the trajectory as of now?
Well, of course, we've seen inflation in the US fall sharply, and now it's flattening out at just above 3%, or with core just below 4%. And I think there's a lot of evidence now, as you start to see some softening of some of the resilient components, such as the housing, owner equivalent rent, for example, plus the potential for more oil price, energy drops, that I think we may see a renewal of that downward momentum in inflation in Q2, which I think is important for getting the rate cut that I expect in July. For emerging markets generally, you've again seen some nice drop in inflation. In India, not so much, because your inflation didn't go as high, frankly. But I think we are heading now out of a period of the sense that inflation has stabilized at slightly higher than desired levels to a situation where I think we could see inflation coming lower. The other point that should be made here, Vikram, is that the Fed often talks about real interest rates, and if inflation is going to head a bit lower in Q2, and they keep interest rates at 5.25 to 5.5, real rates will, by definition, have risen. That will put more squeeze on the economy. So I think the lower inflation is very important. Powell has talked a lot about this, but of course he's talking about the data that's already been published. It's in the rearview mirror. I think going forward, these numbers will get better. they'll get better in emerging, they'll get better in India, and I think that's all good for markets. And so I think this is after today, you know, the chances of a so-called soft landing have improved, and I think we've got a bit of a Goldilocks economy. Sorry to use too many metaphors there, but I think these numbers today were very, very positive for risky assets.
Despite the metaphors, yes, indeed, that is the hope, and that is something that investors are going to be watching both on Wall Street and the Large Street. But thanks very much for joining us with your perspective as ever. Geoff Dennis, always a pleasure.
If you like this video, then like, share and subscribe to ET Now.